All right, y'all, back to work. We've had a hell of a week so far, and we got one more big day left coming tomorrow, and we've got some beautiful trading ranges on the charts right now. Now, if you watch these videos, you know that ranges, they love to rotate up and down with pendulum swings, which means it looks like reversals are probably where the money is made tomorrow. Buying low, selling high, looking for traps. I'm going to cover the entire roadmap, as always, in tonight's video. I want to make sure by the time we're done tonight, you have an easy game plan, easy roadmap to make some money tomorrow morning as well. So charts are ready. Enough of the intro. Let's go find some more winning trades. It's been such a fun week to be a day trader this week. Boy, charts looking good tonight. S&P SPY ready to go tonight. Nasdaq, triple Qs are all ready. I have five clues on the charts right now that are telling us where the winning trades are waiting for tomorrow. One of those five clues is right here on the hourly time frame. It is easy to see right now. The bears have the overall directional bias. I like to use these higher time frames, these hourly time frames, to give us the overall momentum direction, which is obviously very bearish. That's one big clue for tomorrow. Second clue is over on the calendar for tomorrow. Of course, tomorrow's a Friday. There are three things on my mind for tomorrow morning. One, of course, is tariff talk. We know there's a lot of emphasis right now on the tariff talk coming out of the White House. That is a big thing we're watching tomorrow morning. Second thing we're watching tomorrow is the consumer sentiment number at 10 o'clock Eastern time. That has a tendency to move the market, so don't underestimate that consumer sentiment number tomorrow morning at 10 o'clock Eastern time. And the third thing we're watching for tomorrow is don't forget, we have no video newsletter next week. Next week's the third week of March. We'll take the week off from the YouTube videos and come back on March the 24th. So don't forget, tariff talk is definitely something we're watching closely right now. Unpredictable tariff talk right now. Consumer sentiment at 10 o'clock Eastern time that will move the markets tomorrow. And again, I will miss you guys next week coming back on March the 24th. That was our second clue. Big news coming out tomorrow morning. Third clue now, back in our charts. Let's now drill down to some tick charts. We don't want to use the hourly charts for entry timing. We know we're overall bearish right now. Let's now drill down to some tick charts though. Tick charts are based on volume. They make pattern recognition a whole lot easier. And by the way, if you're watching for the first time right now, that is an 8,000 tick chart, all the time frames in the upper left-hand corner. And that, my friends, is the 21 EMA. It's pretty much the only indicator we need to find winning trades each week. There are three more important clues right now on these tick charts. One clue is that strong move down we saw this afternoon, but we saw that beautiful double bottom bear trap. If you're with us this morning, the trade room, what a fantastic trade that was this morning. But things rolled over as more tariff talk happened this afternoon. That strong run down. Now, why is a strong move? Why is it important? Because anytime we see a strong move, strong moves love to retest. And so we know right now that strong run down, those bears are going to try to take out that low. That's one big clue here on the tick charts. Second clue on the tick charts, and the fourth clue overall, is this trading range right here in front of us. Now, why is that range important? Because ranges, they act like magnets and they love to rotate back and forth. Remember, we like to use things like expanding triangles. We like to use things like pendulum swings, basically symmetry above and below. That trading range, that is a huge clue for reversals tomorrow. And what might be my favorite clue on the entire chart right now is this previous trading range. Now, why is that a big important clue? Because if there's one thing you learn about trading, I hope it is the way ranges work. When ranges break out, they love to make measured moves and they love to then break out, pull back. That is the life cycle of a trading range. They rotate back and forth, they break out, and they look for breakout pullbacks off the edges of that trading range. So put all these clues together right now, and I think it's somewhat easy to see right now. This is why I said earlier, it looks like reversals are probably where the money is made tomorrow. Now, every once in a while, we get a breakout, range breakout. So what I'll do tonight is, here on the S&P, let's talk about trading reversals. There are three different techniques I like to use to trade these reversals. But later on in the video, I want to show you a kind of a simple trick using the moving average that tells me when a breakout can be trusted and when we start looking for breakout pullback. So if you like making money, I would definitely stick around all the way to the end. I'm going to kick this up a couple more notches as we go deeper here into the video. So let's talk about trading reversals back and forth right now. I love the underbelly of that trading range. For example, I would love to go up. I would love to use what is basically a bull trap, right? Bull trap, right? As it pulls back now, look for buyers to try twice. Once, twice, get that lower low, trap in those bulls, and basically use their stops to fuel that reversal back down again. I'm not a big fan of picking tops up here. I don't like indicators. I like to just simply wait for the breakout, trap the bulls in, use their stops to fuel that move going back lower. Now remember, as we're rolling back down again, as we're rotating right now, don't just kick your feet up on the desk, keep the foot on the pedal and look for ways to add to your winners and add on. The easiest way to make more money in trading is to add to your winners. Look for this pattern, lower low in price. I'm gonna get right above that high. The key to this is the separation off that moving average. Look what happened right over there, right? They run down, they pull back, they separate off that moving average, and look at how it pops back up right there, and everybody whacks it right back down again. That is the add-on trade I'm describing right here. So we pop up, we trap the bulls in, we squeeze those stops back down again. As it's rolling lower, we look for that separation off the moving average, and we're adding to our winner back down again. Now remember, the amount we go above, the amount we go below, that can be used for targets. Once we get down here now, this is a horrible place to be selling. It's a great place, you guessed it, for a bear trap. Let's now use that same basic technique. And again, there are 3 ways to do this. This is the first one, the basic stuff here right now. As it pulls back now, I'm not gonna pick the bottom here. I wanna wait for it once, twice, higher high. Make those bears commit. Use those stops now to fuel that move. And remember, don't just bask in your own glory. Don't count that money just yet, right? Keep the foot on the gas pedal and keep adding little bits, right? 1 contract, 2 contracts, right? As it adds back on. A bear trap and an add-on. A bull trap and an add-on. That's 1 of 3 ways to trade reversals. Now, here's a second way, a little bit more advanced way to trade reversals. I mentioned earlier, I would love to run up and trap some bulls in, but sometimes there's so many bears up here, it gets whacked right back down again. If we get a V top off that high, if it starts grinding back down again, these are one of my favorites. Because at this point, momentum is now turned over. Watch closely. Draw a trend line off that low. Bring that trend line up around that high. We saw one of these on, what was it? Was it Tuesday's CPI report, right? You want that bull trap right above that high. Remember, first test is the best test. We go up. We don't get a chance to trap the buyers in. It gets whacked back down, starts grinding down again. Remember that grinding motion? That's the giveaway, right? The grinding motion over here, right? Grinding down channel. Are we surprised everyone sold that first test right now? Of course not. Those patterns happen all the time. Pop, grind, grind, grind. That's exactly what I'm talking about right there. Now, as we go lower here, we take our profit on the short. We would love to now get that bear trap 1, 2 back up again, but all of a sudden it just bam, runs back up again now. It V-bottoms off that low, grinding, grinding. The grinder is the giveaway. The grinder is the giveaway. It'll grind above that moving average like that. You see that stuff, mark that trend line, bring it down to that bottom, find that channel, and remember again, look left. Find some of these prior swing lows. Find one that lines up around the low of that channel, and whatever you do, don't miss that first test is the best test. Now, a lot of times we'll get this entry with a strong green candle closing back above that moving average. Sometimes we don't get it. Sometimes what happens is bears will come in, bears once, bears twice, a ton of examples of these inside our free trading classes, right? So these are V tops and V bottoms. V top, first test short here, V bottom, First test, long off that low, trading the rotation reversals back and forth. That is 2 out of 3 reversal trades during range markets. Now, the third one might be my favorite out of all of them. Before we talk number 3 though, let's slow down for a second. I know most of you guys and gals, I know you guys know these patterns. You're making money with these. You know why we love ranges so much. But if you're watching for the first time right now, what the heck is this guy talking about? This might be a brand new strategy for you. Don't you worry. I teach this entire roadmap in my free trading class. In fact, I have a ton of examples, bull traps, bear traps, add-ons, V-tops. Guys, I have so much more I'm going to share with you. And most important, I want to help you guys time better entries and make more money with this stuff. I'll put a link up top here for you. Upper right-hand corner, hit that link that popped up there. Take that free trading course because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room that literally tells us exactly where the winning trades are going to be each day. More importantly though, I want to teach you to time better entries, my 4 favorite entry setups. Guys, the markets are way too good right now not to be making consistent profits. So if you're still missing the best entries, if you've lost your confidence in your indicators or your current strategy, don't wait anymore. Hit that link that popped up there. Watch that free trading course. Everyone loves the trade examples I include in that short video series. Best part is it's 110% free for you. And also, too, guys, keep in mind, too, I'm going to put all the important links to learn the strategy, learn the entry tactics, how to find winning trades, time the entries, time the exits. Guys, most folks, they start making money all on their own, all from that free video course. So again, I'm going to put all the important links to learn that stuff in the description of the YouTube video. Oh, and don't forget, too, if you're on Twitter or X, I post a ton of charts and videos and mindset stuff in between these YouTube videos. If you're on Twitter X, give me a follow. I will see you guys on Twitter throughout the day there. So that is where we can go to learn more about all the entry tactics that I can't teach everything here in these videos. Okay, now, where were we? Okay, we're talking reversals. We're talking reversals back and forth. We talked about the bull traps, right? The bull traps and the add-ons, right? We talked about the bear traps and the add-ons. We talked about the V-tops, right? And the V-bottoms and the finding that channel. And the first test is the best test. Okay, let's now talk about one of my favorites. We saw one this morning. We call these retest trades, right? Every once in a while, we'll get a breakdown. It'll pop up, retest. Now remember, we are day traders. We don't need this thing to go to the moon, right? We use leverage in futures. One of the best parts about futures is leverage, right? So get on the bus, trade futures. We don't need big moves. This is a huge winner this morning in our trade room. That retest trade we saw this morning in our trade room, right? That's exactly the same kind of game plan for number 3. For example, we oftentimes will run up. Oftentimes we'll get that bull trap up here, run back down again. But again, strong run up. They love to retest. We may easily run back up, take out that high. Now, here's the way I look at this. Anybody who buys that pullback right now, remember, we're a bear market overall, right? So anyone who buys that pullback, they're taking their profit targets at that high. So the way I look at it is buyers down here become sellers up here. Is this a good place to buy? Of course not. It's the worst place to buy. Remember that 60-minute time frame? We're so bearish overall right now. If this is a horrible spot to be a buyer, it's a beautiful place for, you guessed it, a bull trap. And again, when I say bull trap, keep it simple, right? We don't need some divergence, waste of time with indicators. Let those buyers come in. Now remember, when you do this, it's going to be lower lows, 1 and 2. Why lower lows? Because buyers want to buy low. Buyers want to buy low, right? You want to buy something by the cheapest price possible, right? We try to, right? Buyers buy once, buyers try twice. That way now I know where their pain is. Now I know where buyers turn into sellers, right? Okay, again, in our trade room, we call these retest trades. We go up, it retests, we trap the bulls in, we don't pick the top, we don't blindly sell this stuff. I know some folks that do that stuff. It doesn't work very well, right? Not in the long run, at least. Let those buyers try once, try twice. Then as we go lower, remember, keep the foot on the pedal here because it's a range market. It's going to want to rotate back down again. So keep on adding, right? 1 contract, 2 contracts, right? Something small right there. Lower low, adding on right there. Double top, retest trade, bull trap, add on. traps, add-ons. We run lower, right? We run lower. We get that 1, 2, right? Back up again. Pops up. Next leg lower here, right? Comes back and retests that low. This is not a breakout yet, okay? I will talk about, in a moment actually, I will talk about when we know we have a breakout, right? You're gonna laugh when you see how simple this trick is with the moving average for how to know when breakouts can be traded and when breakouts should be faded or traded against here. So we see a breakdown, right? Markets break down here. We bear trap in, or sometimes it'll V bottom like this and we don't get a way to buy it, right? Sometimes we don't. Like this, right? Sometimes it'll run lower. We don't get a chance to do it, right? It all depends what the market gives us. We run lower. We trap the bears in if we can get it, right? If we can get it. We pop up. We hold the underbelly of the range, right? Ranges love to break out, pullback. We make that run going lower here, right? That run going lower. We retest that low. We trap those bears in. Bears once, bears twice. Think about this. Anybody who sells right there, they're taking their profit where? Right here. Sellers up here become buyers down here. It's so important we think about how this stuff actually plays out, right? What is actually happening down here? These are rookies down here, right? Professional sellers are not selling down there. They're shorting the pops up here. These are rookies chasing after things like we've all made this before. Trap the bears in and again, squeeze those stops running higher here. Get that separation off that moving average. Again, there's a lot of examples of these inside our free trading classes. The link again is in the description of the video, and that run back up again. Remember, the amount below, the amount above, let that trade run, right? Let that trade run. Keep adding to that winner. All right, so now we've covered 3 different variations of reversals because you know me, I have no crystal ball. I can't predict the market. What I do know though is most ranges are going to rotate back and forth like this. Now you know a couple different ways in which I'm looking to time the entries back and forth. But now that brings me to the $1,000, the $10,000 question for tomorrow. How do we know when a breakout is a legit breakout? And how do we trade that breakout? How do we know when I go lower? How do I know that breakout is legit and should be shorted, or when it should be bought back up and faded back up again? That is a good question and a very easy question to answer. Let's now go grab the Nasdaq right now. Nasdaq triple Qs. Boy, look at this range right here. I love this range. Now again, Trump's tariff talk is definitely keeping this market pinned lower right now. Remember though, ranges, they love to rotate, right? They love to rotate. Would anybody be surprised if that strong run down, we know strong runs love to retest, right? Would anybody be surprised if they retested that low and then rotated all the way back up to the other side of that trading range up there? Nobody should be surprised at that at all. It's been a huge oversold market going lower here. Again, we'll see if Trump lays off the tweets tomorrow, or if Europe, right, kind of gets on board here with negotiations for the tariffs here. We saw that back and forth today with the 200% on the champagne from France. Right? That's getting real now. Anyways, before we talk about the Nasdaq tick charts and plan entries for breakouts, if you're enjoying this video right now, please help me grow this channel by hitting that like button and make sure you subscribe. I know we're all busy people these days, and I appreciate you spending some time tonight and watching my videos. So thank you so much for the likes, subscribes, all the subs, all the ongoing support. Now, let's roll our sleeves up here and get our hands dirty here on the tick charts. Over on the tick charts right now, there are so many important clues here on the charts right now. One big clue, very strong rundown. Anytime we see a strong move like this, we expect those bears to be trying to take out that low. Okay, so we know right there's a bullseye on that low right now. Second big clue is this range right here. Ranges love to rotate down, up, down, up, down. Just again, think about triangles. Think about pendulum swings. We call them pendulum swings. They're basically symmetry above and below that trading range. And the third clue, which I love breakout pullbacks. If you're in my trade room each morning, you know how much we love breakout pullbacks. There's your range right there. There is your breakout pullback zone, a beautiful area for that bull trap we talked about earlier on in this video. Okay, so now let's talk about, I'm not going to go over the whole entire game plan because it's the same thing we talked about earlier here on the S&P. Let's now talk about how we know when a breakout is a breakout. Okay, first of all, going higher here. The trick is is the moving average. And what I mean by that is, like, look over here, over there, right? We pop up, we pull back, and we fail, okay? That is what happens during ranges. They pop up, the buyers try, they can't, and they fail back down again, okay? The moment now, when I start seeing this thing separate off that moving average, okay? That's your clue. Separation equals strength. So we run up, we complete the pendulum swing, the amount below, the amount above. We complete that pendulum swing. We don't see now buyers once, buyers twice, collapse back down. Instead, what happens is you start separating off that moving average. Now, very, very important right now, very important. When we start seeing that separation, I mentioned earlier that ranges, when they break out, they love to make measured moves, okay? When I start seeing that separation like this now, I can start getting aggressive and look for what are basically bear traps, technical bear traps, like I teach in the free video course, right? Now, that entry, and I go small on these, 1 contract, right? 2 contracts. These are the most aggressive trades we find in our trade room. Now, at this point now, think about that measured move. Think about now that measured move, right? The amount, the breakout leg, the measured move leg, right? Makes sense? Okay, so knowing that, again, aggressive entry first, small size, right? 1 contract, 2 contract. If you're new to this stuff, probably not the trade be taken right now. Now, we're a bear market right now. We're a bear market, right? So as we complete that measured move now, this is where all the professional buyers are getting out. That means buyers become sellers. And now we look for, remember that crown reversal pattern we talked about last night? Remember, at this point, we're very bullish. So not easy to pick that top. I know we're bearish overall, but when I have a large move like that, there's very good odds we pull back and retest before we make that run back down again, okay? So watch closely here. We break out. We get that separation off that moving average. Again, aggressive buyers now, remember, going to be a higher high. Aggressive buyers are buying right below that low. That locks in now my measured move. 1 leg, 2 leg, profit targets up higher here. A lot of momentum, right? That momentum now wants to retest that high. So the way you short this is a crown reversal. It's a little bit different than the bull trap we showed earlier. A crown reversal pattern is 1 try, 2 try, it's a lower low, but it needs a bull trap above the high. It needs to go above a prior swing, right? That allows me now to sell nice and high. Now, very important here. That crown reversal goes back where? It goes back to the top of that trading range. Ranges love to break out pullback. So once we take our profit off on the edge of that trading range now we wait and see what happens, okay? Does this begin to roll lower and separate? If it does, we attack, right? If it begins to separate, we attack. Make sense? If it separates, we attack. Because again, that range is going to want to drag this thing back down again. However, what happens a lot of times in these cases is it starts pulling back. Bears try once, bears try twice. We're not getting that. We're not getting that separation, that lower low. Is this making sense right now? I know it's a bit advanced. I warned you guys, it's a little more advanced here. I think we can handle it though, right? Okay, so now we're not getting that separation. Now we're looking back to that moving average. Now remember, all the momentum right there, what does it want? It wants to go back and take up that high. Bear trap, add on. As always, that separation. There's your add-on. Are you smelling what I'm stepping in right now? Bear trap, add-on, back up. Now, anybody who buys down here, where's their profit target? Up here. This is a bear market, right? Overall, bear market. Now, remember the retest trade? Retest trade. What does that mean? It means bull trap. 1, 2, trap those stops in, and again, adding on back down. This retest trade after a breakout pullback is one of the highest percentage trades you're going to get in an overall bear market, right? So recap here. Again, the most aggressive entry is that one right there, all right? Got to have that clear separation. A lot of times, these are slow, right? They're very slow. They're going to slowly grind up. Aggressive entry here, small one. Crown reversal, right? Selling back down again. A lot of times, this will drop. A lot of times, it'll keep going, right? Sometimes it will. Leave a runner. If it doesn't, though, we hold the top of that range, right? Bear trap in. Add on back on, profit comes off of the high, retest trade, double top reversal, bull trap, add on, and these oftentimes will just dump and roll back down because now everybody knows we're an overall bear market. They're selling that retest, going higher here, right? Screenshot this. This is the life cycle of a range breakout, pullback in an overall bear market. Going lower here right now, right? Going lower here. Now, going lower, again, we run lower. We see separation off that moving average, lower low in price. In comes the aggressive entry, right? Again, most aggressive entry, right? Very aggressive, right? You're selling very low here. Again, you get your breakout leg, measured leg. That's your profit target. Where's the underbelly of that trading range? Right there. Get that pull back. Remember, bear market, all that momentum. Anytime we see a strong move down, it's begging to retest that low again. Okay, now maybe it reverses, right? Maybe what happens is something like this. Maybe it runs up like this and it starts grinding. What do you do in that case? You find that new channel off that low, right? See, this works here. V bottom. You find those prior swings and you buy the you know what, out of that, right out of the low of that channel. First test is the best test if it grinds back up again. But again, most of the time it won't, right? Most of the time it'll go up 1, 2, trap those bulls. Remember, lower low. Trap those bulls in. Buyers want to buy low. Squeeze those stops. Run those stops back to retest that low. When all the rookies start chasing after this now, you trap them right in. Retest trade, right? Retest trade. Trap the bears in. And I swear, you can hear people getting stopped out on these retest trades. It's just squeeze, right? The stops get triggered. The goal now is back up to retest the high. Again, this is the life cycle of a breakout pullback. It begins with separation. It finishes with a measured move. Measured move now, right? Measured move now. Oh, and I forgot too. We go lower. It's that crown reversal. Almost forgot, right? Crown reversal. Bears once, bears twice, crown reversal, right? That crown reversal pattern right there. And again, I know I'm just drawing right now, but a ton of examples of those inside that free video class. Pause the video, the link's in the description. You can thank me later. Your P&L will thank you for doing that, right? So crown reversal pattern right there. Trap those bears in, again, at the measured move, okay? Combine it with the measured move, okay? Crown reversal pattern right there. Pops up. Breakout pullback now off the underbelly of that range. It wants to retest that low. We take our profit at the retest of that low and we trap those bears in. Now remember, I can be a lot more aggressive on the retest trade, okay? Because now I know where that low is, right? The first move lower, I gotta be more careful with the crown reversal. Makes sense? The initial move lower, it's gotta be a crown reversal. But on the retest trade though, I can be a lot more aggressive because now I know where that bottom is. And I know now anybody who sells up here, they're taking their profit right there, right? So sellers become buyers at that low. Trap those bears in, higher high in price, and again, get that separation off that moving average and back on. Now, guys, we might get one of these trades, two of these trades, maybe all of these trades tomorrow. But that's the goal. The goal is to make sure you know what to expect. This is the life cycle of a breakout pullback. All right, well, I'm getting excited right now. Just talking this stuff here, guys. Hope you enjoyed tonight's video. That is the game plan for tomorrow. Now, speaking of tomorrow, the place to be is in my trade room every morning, 8 o'clock Eastern time. Guys, the easiest way to make money in these markets is to come do it with us every morning in our trade room. Again, I'm gonna put all the important links in the description of the YouTube video. Start first with that free video class. Enjoy all the trade examples. Most folks, again, everyone loves all the free video classes on the website. So start there first, then come join me in my trade room and we'll do it together. In the meantime, guys, I will miss you next week. Make a ton of money for me next week. Be well, be nice to each other. We'll see you back here on March the 24th. In the meantime, be here next time. Adios, amigos. Bye for now.